Okay, let's unpack this deep dive. We're looking at one of the most talked about investments out there right now.
Yeah, Warren Buffett's big stake in Occidental Petroleum, OXY.
Exactly. And using the material you've provided, we're going to try and, peel back the layers. Why has Berkshire Hathaway poured billions into this energy company?
Right. It started strategically back in 2019, but then really ramped up since 2022.
So our mission here is to figure out the core reasons, what this tells you about Berkshire's view on energy, and, well, OXY itself. Let's jump in. It really all kicks off in 2019. Remember, OXY was in that huge bidding war for Anadarko Petroleum.
Oh, yeah, high stakes, a massive deal. And OXY CEO Vicky Hollub, she flew straight to Omaha, pitched Buffett directly to get the funding.
That meeting, it sounds like it was absolutely pivotal. Berkshire committed, what, $10 billion?
$10 billion, yeah. But importantly, it wasn't just plain stock. They got 100,000 preferred shares.
Preferred shares, right. So that means like a fixed dividend payout, kind of like a bond.
Exactly. And a hefty one, 8% annual dividend. That's pretty substantial.
And that specific structure, that seems key based on the sources. Was it just, easy money for Buffett, or did OXY desperately need that specific funding right then?
Oh, absolutely critical for OXY. It gave them the cash quickly to beat their competitor for Anadarko.
Okay.
And for Berkshire. Well, that preferred stock meant steady, high-yield income. It was basically downside protection, even if oil prices went wild.
Plus, they got warrants too, didn't they? The right to buy common stock later.
Yep, warrants for 80 million shares of OXY common at $62.50 a share. So, huge potential upside if OXY stock took off.
Classic Buffett, really. Provide the money when someone really needs it, get favorable terms, secure your downside, but keep that offensive upside potential.
Okay, but then things shifted, right? Because let's look at what happened next. Berkshire did buy some common stock in 2019 initially.
They did, but then, second quarter of 2020, right when COVID slammed everything and oil prices just cratered.
They sold it all, around $15 a share, the sources say.
Yeah, seems kind of weird, right? Doesn't fit the usual be greedy when others are fearful thing.
Yeah. But, and this is important, the sources highlight they kept those preferred shares. That guaranteed 8% income stream was still flowing, acting as a cushion.
Right, okay. Then fast forward to early 2022, first quarter, Berkshire jumps back in big time.
Massive re-entry, buying over 136 million shares, around $44 a share. And crucially, they didn't stop there.
No, they've just kept buying, consistently adding more and more ever since.
It shows this deepening conviction, right? It started as the market recovered, but even before, the full impact of things like Ukraine on oil supply was totally clear.
It was still seen as a pretty good point in the commodity cycle to buy in.
And now, by March 2025, they held almost 265 million shares. That's nearly 27% of OXY. Some reports even suggest beneficial ownership might be closer to 34% now.
Which brings us to the big question, why OXY? I mean, it's energy, it's notoriously volatile. What are the sources saying is the main driver behind this huge bet?
Well, it looks like it's a mix of things. A bet on the wider energy market, but also specifics about OXY itself.
Okay, like what on the macro side?
Sources point to these big tailwinds, like how global energy companies really slashed investment in new oil fields during the pandemic. That's created a kind of structural gap in future supply.
And then geopolitical stuff like the war in Ukraine just made things worse, messed up existing flows, limited production growth.
Exactly. And what's really highlighted is, despite this big push for renewables, global demand for fossil fuels is still strong, actually projected to keep growing through 2045.
Wow, okay.
Oil's still forecast to be the biggest part of the energy mix for years.
So the insight here is you've got underinvestment in new supply, but demand stays strong or even grows, potentially setting up a future supply crunch.
That seems to be the thinking. Some analysts even call it Buffett making a kind of Malthusian bet on energy scarcity. And in that world, efficient producers like OXY, well, they stand to make a lot of cash. And then there's OXY itself. Beyond the big picture, the sources mention things Berkshire likes. Yes, they took on a lot of debt for Anadarko.
Right, that was a concern.
But they've been paying it down aggressively, targeting under $15 billion. That's huge progress.
And their operational efficiency. That must be a factor. Low break-even costs.
Absolutely. Corporate average under $60 a barrel. That means they can still make money even if oil prices aren't sky high. And they've shifted focus, apparently, from just drilling more to prioritizing profits and shareholder returns.
Their assets, too, like the Permian Basin position, strengthened by that Crown Rock deal recently.
Definitely key. A dominant high-yield position there.
And what about the future stuff? I found the focus on carbon capture interesting. That big Stratos project.
Yeah, that's fascinating. It's a strategic hedge, right, against the energy transition. But it also uses their existing CO2 handling skills.
So it lets them adapt, maybe create new revenue streams, makes them more resilient than maybe some other oil companies, and all-weather stock, potentially.
Could be. And you can't ignore the management factor. Vicky Hollob's leadership, that focus on debt, the clear strategy that clearly clicks with Buffett's focus on good capital allocators.
Right, trust and leadership. That's like a qualitative moat in this kind of business. Okay, so wrapping this up, what does all this analysis mean for you, the listener, trying to make sense of this investment?
Well, based on everything we've seen in the sources, it really looks like Buffett's OXY play is a calculated bet, a bet on traditional energy still being vital even as things evolve.
Coupled with, like you said, real appreciation for a company that's run well, generating cash, and actively tackling what's next, like carbon capture.
Exactly. That initial preferred stock deal. That was the safety net during OXY's crunch time.
High yield, low risk, relatively speaking.
But the sheer amount of common stock they've bought since 2022, consistently, that signals real conviction in OXY's value and the energy market's future.
Right. Deep conviction.
And think about it. Berkshire is sitting on this mountain of cash, over $300 billion recently?
Yeah.
And they own this huge growing chunk of OXY, which, by the way, Vicky Hollow has publicly said she'd be happy if Berkshire bought the whole thing.
Yeah, that's the provocative part, isn't it? It
Yeah.
really makes you wonder, could this whole deep involvement, this massive stake, could it eventually lead to Occidental just becoming another wholly owned piece of the Berkshire empire? Definitely something for you to think about.